buying a home with a 10% deposit or a 20% deposit. Well, here are the differences, and the main thing is going to be in the interest rate. So let's assume that you want to buy a home for $850,000 and you have a deposit of $170,000, which is a 20% deposit, therefore you borrow $680,000. Now, with today's current interest rate, let's assume that it is at 5.25% over a 30-year loan term. The weekly mortgage repayments is $866. Now, if you only have a 10% deposit, which is an $85,000 deposit, therefore you need to borrow $765,000. Now, depending on the bank, some banks will charge a low equity premium or a low equity margin. In this example, we're going to use a low equity margin. Because with a 10% deposit, this particular bank here will charge a 0.75%. You can see the loading up here because you are within that band of 10% deposit. So the true interest rate isn't going to be 5.25, it's going to be 5.25 plus the 0.75%, so you'll be paying an interest rate of 6%. Now, the weekly repayments for this over 30 years is going to be $1,058 per week. So one of the things when considering buying with a 10% deposit is the additional charges and what banks are offering. There is one bank that doesn't charge a low equity margin, that charges a low equity premium. However, there is one bank out there that has scrapped or removed that low equity premium, so therefore you're just going to be paying the standard interest rate. Now, there are some other specials out there depending on the type of property you're buying, so that's why it's important to speak to a mortgage advisor to get that guidance. And if you're new to my page, I'm a financial engineer. I'm all about mortgages and personal finance tips.